Greetings everyone, I go by the name of Toto and I would like to welcome you guys back into my YouTube channel tutorial program where we inspire A students to achieve greatness through their method learning. Without wasting any more of your time, let's get straight into today's video. Now before I proceed, I would like to give a special shout out to every single one of you guys who've been watching my YouTube channel, every single one of you guys coming from SWGC, everyone from Kempton College, everyone from Tshwane South, everyone from CJC. Thank you guys. And if I haven't mentioned the school or the college in which you're watching from, do comment down below, and then on the next video I will be sure to give your college or school a special shout out. And then once again I would like to give a special shout out to each and every single one of you guys who've been subscribing, each and every single one of you guys who've been liking, each and every single one of you guys who've been commenting. I see you guys. Thank you so much. I think I'm almost on 400 subs. So if you haven't subscribed yet, please do subscribe. And also guys, if the videos I am making are helpful to you, please do click on that like button. You lose nothing by doing that. Also subscribe if you keep on coming back to the channel. Do subscribe if I'm helping you. The least you could do for me is subscribe or a like. Thank you. So without wasting any more of your time, let me get straight into today's video. So today I'll be looking at our financial accounting N4. So on this financial accounting N4, I will not be doing everything. I'll only be focusing on transactions, income statement transactions. So I'll be showing you guys how you deal with your income statement transactions. So I downloaded a few question papers, random question papers. So we have, as you can see here, we have 2024 question paper. And then here I think we have 2023 November, and then we have June, and then 2022 June, and then we have 2019 June, and then we have 2018 November. So I'll be doing all these question papers. Hopefully I won't spend too much time on these. If maybe, I think I'll do everything. So I'll only be focusing on transactions those difficult transactions. I won't be doing all the transactions because some of these transactions are quite simple. So I'll only be dealing with those difficult transactions. Okay, so now we're doing this question 1. So we'll start with our 2024 question paper. So we're doing this question 1, which is our income statement. We're only focusing on the income statement, how to handle your transactions. So of course we'll be using our Microsoft Excel. So we'll be using our Microsoft Excel to do all the necessary calculations. Okay, so as you can see, they're saying 1.1, they're saying prepare the statement of profit and loss and other comprehensive income for the year ended 31st May. So meaning our year ends 31st May. So let me just quickly do the timeline so that we are all on the same page. So 31st May meaning it starts on June. So meaning June. Let's say June, July, August, September, October, November, December, January, February, March, April, May. So it's May 2022, I think. I'll just confirm that. I'll just double check. And then the year starts 2021, June 2021, and then it ends May 2022. So you must keep this in mind whenever you're doing your exams. Okay, so let me just confirm it was 2022, so ending 31st May 2022. So I was correct. So and then they say 1.2, then 1.3, so we're not going to look at that today. So our first transactions. They're saying adjustments and additional information. So this is where I'll be focusing on until transaction number 10. So I'll try to move as fast as I can so that I am able to cover all these question papers so that I'm able to cover all these question papers. So transaction number 1 is saying inventory bought for 10,825 was returned during this financial period. The goods were included in the inventory on hand as mentioned, but no other entries were made. So if you can hear this transaction, so the inventory bought, so meaning what happened? We bought inventory during the course of the financial period. The inventory bought during the course of the financial period was returned. So we only returned what? 10,820. So this transaction is going to affect our purchases, because we made purchases and then during the course of the financial period we returned some of the inventories to our suppliers. So on the purchase account, so we know that our structure, our income statement structure, it says sales, cost of sales, and then we have, if we are doing the periodic, so there's two different types of income statement. So we have the periodic and we also have the perpetual. So when you're doing the periodic, you have to calculate your cost of sales, and then perpetual cost of sales is already given. So assuming that we are doing periodic, so we have opening inventory, then we also have inventory, and then we also have purchases, and then we have our carriage on purchases, and then we also have import duties, and then we also have customs, then we also have our closing. So we less closing inventory. So I'll just put it in bracket just to indicate that we're lessing the closing inventory. Brackets. So just to show that we less our closing inventory. So we also less our, or let me just highlight that with weight. Just indicate. Okay, let me just go with red. Then also here, just red. So the red indicates that it's a negative amount, and then when you say sales minus cost of sales, you get your gross profit. From your gross profit, you have other income. I'm sorry for writing the structure now. This is a bit time consuming. Gross income, and then we have our operating expenses. We have our operating expenses. Okay, so the structure more or less looks like this, and then you have your other incomes, your other operating expenses, then you have your financial cost, which is your interest on loan. So financial cost, we have our interest on loan. That's your financial costs. Okay, so this is the complete structure. So now going back on that first transaction where they're talking about our inventory that we're returning to our suppliers. So we're going to open a bracket on our purchases, and then we record the amount for purchases, our total purchases for the period, and then we less that 10,820. 25, I think, if I remember correctly, close bracket, and then you will just simply minus accordingly. So that's how you deal with that transaction. So I won't be dealing with too many of these transactions because they are simply straightforward. Okay, so but for now I'm just doing it because just in case you don't know. Number 2, they're saying custom duties of 3,000 was still outstanding for April and May. So custom duties, where are the custom duties? Here is our custom duties. This is the amount for custom duties. The 57, you can see it's 57,000. So 3,000 for May and for April and May is still outstanding. So you go back to your structure and then custom duties. On this custom duties, you're going to open bracket 57,000 plus 3,000 close bracket, and then you get your answer. So that's how you're going to deal with that transaction. And then moving on. We have number 3, which says inventory on hand 31st May 2022. And then we have our inventory. So this is going to be part of our closing inventory. So on your structure, we have closing inventory. That's going to be part of your closing inventory, the inventory on hand. And then we have our packing materials on hand. So meaning this is the total packing materials that we didn't use during the course of the period. So how do you deal with this? So this amount you're going to minus it from your total expenses of packing material. So we have our packing material somewhere. So this is our packing material of 60,000. So you're going to see this 60,000 minus what? There's 11,385. So that's how you deal with that. So pretty simple. And then number 4, they're saying rent. So now this is where it gets complicated. Rent has been received up to 30 November 2021. So rent has been received 30 November 2021. So let's see the rent amount, how much we have received. So rent. Okay, so meaning we received 120 so far because they said it has been received up until 30 November. Going back to our transaction. So rent was received for these months. The rent amount has been received for these months. And they said it's what? 120,000. So meaning that 120 is for how many months? 1, 2, 3, 4, 5, 6 months. So this 120 is for these 6 months. So meaning this remaining 6 months, the remaining 6 months rent is still due. It's still due. So simplest way to do this, you can simply say 120. To know how much rent we have to pay for the whole year, you can simply say 120 times 2 and then you'll get your 240, if I'm not mistaken, 240. And we're gonna get our 240, which is also here it's 6 months. So we're going to pay, they're going to pay us also 120,000. And we say 120 plus 120, you get this 240 for the whole year. So on your transaction, on your structure, other income, you're going to have rent there, and then you say open bracket, and then you say 120 plus 120 close bracket, you get your answer. Straightforward. I hope you all understand that. And then another way of doing this, you can simply say you can divide this amount by the number of months. Say for example, maybe this amount was for until December. Now we wouldn't be able to use that times 2. We wouldn't be able to use that times 2. So another way of doing that is to say what? Is to say this 120 to see how much are we paying, how much are they paying us every month. You divide this amount by 6, because it's 6 months, isn't it? So you divide by 6 months. So you divide it by 6 months. So when you divide by 6 months, you are left with 20,000. So meaning every month they're paying 20,000, and then you say this 20,000 times 12 to get what? To get that 240 to get the total amount of rent for the year. But then let's move on. This rent was pretty simple, so maybe we'll find more rents which are complicated on other question papers. Okay, so I'm wasting too much time on this first question paper. Okay, but then let's move on. Number 5, they're saying an additional amount of 24,000 must be written off. So this one, straightforward also, 24,000 must be written off. So write off meaning credit losses. This is our credit. This is going to form part of our credit losses because it's irrecoverable, meaning we won't get that money back. So this amount is going to affect our credit losses. So meaning on other expenses, other operating expenses, we are going to have this credit losses, and then we're going to have this 80,650. We're going to add the 24,000 on this together with this 8,000 to get our total credit losses for the year. Okay, so we move on. We have salary. So the same salaries were paid for 10 months only. So salaries have been paid for 10 months only. So going back 10 months, our 10 months ends here. So salary has been paid for 10 months. How much was paid? Let's see how much was paid for this 10 months. Going back to our question paper, how much was paid for 10 months? So salary, we have salaries here, and it says 869. So we have, let me just remove this also. So for salary, we have 869,000. So this amount is for 10 months only. So meaning we still remaining with this 2 months, which is April and May. We still have to pay salary for April and May. So let's see what they say. What are they saying? So now they're saying, note, on 1 April 2022, salaries were increased by 10%. So since salaries were increased by 10%, it means now the remaining 2 months are not going to be the same as the previous 10 months. So if we never had this statement that says, note, on 1 April 2022, salaries were increased by 10%, we were simply going to do what? We're simply going to say that 869 divided by 10, and then we're going to get what we pay per month, and then that amount we pay per month, we're simply going to times it by 10, not by 10, by 12. But then now, since we have this, things are going to be done differently. So now, but then we're still going to get the amount for a month. How much are we paying a month? So we say it's equal to this amount. We divide it by 10. 10 being the number of months. The number of months, and then we get what? We get this 869. Okay, so some people will be confused. Let me just say we're supposed to say 869 divided by what? By 10, total number of months, and then which okay, so don't know what's happening. Then we redo that. So it's 869 divided by 10, and then we get, I have no idea what's happening. What is happening? Why? Okay, so I don't know why this is happening. So let me just use this. Guys, it is divided by 10, which will give us this amount of 86,900. So meaning we're paying 86,900 every month. So now they said on 1 April, the amount we're paying per month increased by 10%. So now how do we get the 10%? So we can simply say is equal to 86900 divided by 869 divided by 10, not divided by 10, man, times 10%, times 10%, times 10%. So we want to find out what is the 10% of this amount. 10% of this amount is 8690. 8690 is the 10% of this amount. So if I was to do the calculations here, it was supposed to be 86900 multiplied by 10%, and then which will give us the 8690. It gives us this 8690. So that's our increase, our 10% increase. And then therefore we say what? We say this amount plus this amount. To know what? To know the total amount we're supposed to pay for the month of April. So the month of April, it's supposed to be 95590. So meaning also for May, we're going to pay the same amount. We are going to pay the same amount for May. So what we can simply do, we can simply say 95590 times 2 times 2 to get how much we paying for that remaining 2 months. So the remaining 2 months is 110. So the remaining 2 months is supposed to be 180. So we're going to have the rent, and then we write this amount in brackets. We say this plus this amount, this amount plus this amount, to know the total amount we're paying for the period. To know the total amount we're paying for the period. Okay, so moving on. So I see that I'm taking too much time on doing some of these transactions. Okay, so transaction number 7. So I hope we all got that part. If ever maybe there's something that I didn't quite explain the way you wanted me to, just leave a comment, and then I'll be sure to go back on that and just maybe find a similar question paper and redo this transaction on its own. Okay, so number 7, they're saying the sundry expenses account includes an amount of 120,000 for an annual bonus that was paid up to 31st August. So let's reread that. Sundry expense account. This is our sundry expense account of 431,100. It includes an amount of 120 for an annual bonus that was paid up to 31st August. So this annual bonus was paid up until 31st August 2022. So as we can see, our year ends on May 2022. So but that annual bonus was paid, so it's May. So let me just say June, July, August. So that annual bonus, it has been paid up until August 2022. So since it was paid, let me just do this. Let me just remove all these amounts for rent. Just remove everything for rent. Okay, so since this premium has been paid up until August, so it means it's annual meaning 12 months. So it's being paid for 12 months. So meaning we started paying that annual premium from September. So it means we started paying, so from September until August, it's 12 months. So we're paying what? 120 for annual bonus. The amount of annual bonus. So this amount is for from September until August 2020, 2022. But we can see that from this amount, part of this amount, we are looking for only the amount in which belongs in our financial period. And as you can see, our financial period ends when? Ends on May. Ends on May. So meaning the amount for June, July, August, that amount will affect what? Will affect the next financial period. So for now on this 120, we are going to deal with what? With the amount only that needs to be in our financial period. So how do you do this? So we can simply say this 120,000 divided by 12. Divided by 12. I think you're supposed to get like 12,000. So I think it's 12,000 if we divide that by 12. And then it will give us our 12,000. So this 12,000, this is the amount. So the 12,000, so meaning every month we're paying what? We're paying 12,000. Every month we are paying 12,000. So now, since we are looking for only the amount that belongs in our financial period is from September. So we count from September 1, 2, 3, 4, 5, 6, 7, 8, 9. So we can say this amount times 9 to know what? To know the amount in which the amount that belongs in our financial period. But then now, since we are trying to get rid of the amount that doesn't belong in our financial period, we're going to say what? This 12,000 times 3, so that we can be able to get rid of what? 12,000 times, let's do 12,000 times 3 to know how much are we paying for this 3 months that doesn't belong in our financial period, which is 36,000. 36,000. So this 36,000, we're supposed to subtract it from our sundry expense account. So on our other expenses, we're gonna have sundry expense here. Sundry expense, and then we open bracket, and then we say, we open bracket, and then we say 431,100. 431,100 minus 36,000. So this is how it's going to be sundry expenses. Then we say open bracket, and it says 431,100, I think, like this, minus 36,000. Why? Because this 36,000, it does not belong in our financial period. And then the answer you get there, that's what you're going to write on your total column. So that's how you deal with that transaction. Okay, moving on. So I see I'm taking too much time doing all these transactions. So moving on, what are we doing? So now we're supposed to do our depreciation. So I'm pretty sure that we all know how to calculate our depreciation by now. So I'll just do this quickly, like fast, very fast. So if maybe I'm too fast, just go back and rewatch the whole video. Just rewind the video and watch again. So what are they saying on this question page? What are they saying concerning our depreciation? So they say non-current assets must be depreciated as follows: equipment 20% per annum according to the diminishing balance method. So diminishing balance method, it means what? Cost minus accumulated depreciation. Cost minus accumulated depreciation. Okay. And then vehicle 15% per annum according to the cost price method. Cost price method meaning 15% multiplied by your cost price. Okay, so note, a new vehicle 200 was purchased on 30 November 2020, 2021. Okay, so let's start with our equipment because this one is pretty straightforward. So we're gonna start with our equipment. So our equipment diminishing balance method. So let me just do this. So we're first doing equipment. So how are we going to do that? We're going to say okay, so equipment. Okay, so as you can see, our equipment, they're saying it's 790. So it's 789,000 minus our accumulated depreciation for equipment. So accumulated depreciation for equipment, they're saying it's what? 8 minus 890. 1, 2, 3. Like this. And then the answer we're going to get there is 700,000. And then so this 700,000, that's what you multiply by 20%, because this is 20% of the 700. So that's what you multiply by 20%. So we say multiply by 20% to get what? So when you say equal to 700, 23 multiply by 20%, we're going to get 140. So this 140, it's our depreciation for equipment. So that's our depreciation for equipment. So under operating expenses, we're going to have a line for depreciation and then open brackets 140, and then we're going to add it with what? With the depreciation we're going to get for vehicle. So vehicle, we're going to calculate it differently because we did purchase a vehicle during the course of the period. So vehicle, how are we calculating this? So they're saying, note, a vehicle of 200 was purchased on 30 November 2021. So our trial balance, as you can see, is the trial balance for 31st May 2022. So meaning at the end of the financial period, this trial balance was pre-adjusted. Okay, so what are we looking for, Conjure? Vehicle. So vehicle, we have 850. So this 850 is including the new vehicle we've already purchased. So we need to minus it first, because the new vehicle bought, it hasn't been in the business for a total period. So it wasn't in the business for the whole 12 months. So it was only in the business for certain amount of months. So certain number of months, actually, not amount. So certain number of months. So we need to remove it, the 200,000, I think. So the 200,000, you need to remove it, and then you will calculate it separately. So when we say 850 minus that 200, I think we will be left with 650. 1, 2, 3. So this amount, this is the vehicle that has been, that's the total amount of vehicles that has been in the business for a total of what? Of 12 months. 12 months. Yes. So this amount, we're going to simply say what? We're going to say times 15%. 15% multiplied also by what? 12 over 12. You can say 12 over 12. Or you can just simply say, can end it here. Still, you're going to get the same answer. So when you say 650 equals to 650,000 multiply by 15%, and then you get 97,000. We get our 97,000. Okay, and then again, now we're calculating the new vehicle. So this is for old vehicle. So now when we're calculating for new vehicle, we're going to say what? 200,000 multiplied by 15%. And then so this vehicle, they said they bought it. When was it bought? So this vehicle, they said it was bought on, the vehicle was bought on 30 November. 30 November. So as we can see, our timeline. So it was bought 18 November. So January, June, July, August, September, October, November. So November 30, it was bought. So when we counting, we'll count from December because it was bought on the last day of November. So now it will start depreciating from December. So December, it's 1, 2, 3, 4. 1, 2, 3, 4, 5, 6 months. So it has been in the business for a total of 6 over 12 over 12 years. 6 over 12. 6 for 6 months. Over 12. So the answer is 203 multiplied by 15. 15% multiplied by 6 over 12 to get what? To get this 15,000. So now our total depreciation, we're going to say this plus this plus this to get total depreciation. So we're going to say equipment depreciation plus the old vehicle depreciation plus the new vehicle depreciation. So that's how you do that depreciation. So moving on, they say number 9, create an allowance for credit losses at 8% of trade and other receivables. Okay, so we're doing 8% of trade and other receivables. So the 8% of that is what? We're going to say 8% multiplied by, open bracket, they said 8% of what? Of trade and other receivables. So our total trade and other receivables is what? 724,000. And then we're going to minus what? We're going to minus those bad debts that we had in the beginning. We had bad debts somewhere, irrecoverable. So this irrecoverable, we have to minus it. So meaning minus 24,000. Close bracket. And then we're going to have what? We're going to have 8% multiplied by 700. I think, yeah, it's 700,000 without the 24,000. So let's call this to that. And we get what? We get 56,000. So we're going to get what? 56,000. So this 56,000, that's going to form part of our allowances for credit losses. So we're calculating allowances for credit losses. So this is going to be part of our expenses. So allowances for credit losses, it can be an expense or an income depending on what the transaction is saying. So on this transaction, it's saying we must create an allowance for credit loss. So allowance for credit loss, it's us as the business taking money and putting it aside. Taking money and putting it aside, taking part of our profits and putting it aside for those credit losses. So now since we're taking 56,000, we're putting it aside, so we're going to treat it as an expense to the business. So we're going to record this amount under our operating expenses. Moving on, the last one, number 10. So number 10, it says provide for the outstanding interest on loan. Provide for the interest on a loan. So note, so we need to calculate interest on loan. So note, the interest rate on loan from Africa Bank was increased by 2.75% on 1 December 2022. It was increased by 2.75% on 1 December 2022. So let's see the interest on loan. So we're looking for loan. So as you can see, loan from Africa Bank, as you can see, is 12.75. So this 2.75, that's the increase. So meaning at the beginning it was what? It was 10. At the beginning it was 10%. At the beginning it was 10%, and then during the course of the financial period, it increased by what? It increased by 2.75%. So when we're calculating this interest on loan also, it's going to be, things are going to be done differently. Okay, so let's see how we do that. So from January, when did it increase? 1 December. So from January until December, we had what? 10%. So let me just do this. Until November 31st, it was 10%. I'm not going to do that. So let me just put this until November, which is what? 10%. Until November it was 10%. Now from December going that way, it was what? It was 12.75%. So now how do we calculate this? What we're going to do is simple. What we're going to do, we're going to look for the amount. How much did we borrow? So we borrowed a total amount of what? Of 120. Not 120, 1,200,000. We borrowed a total of 1,200,000. So this amount, we're going to say this amount multiplied by what? Multiplied by 10%. Multiplied by 10%. And then also we're going to say again multiplied by the number of months in which the interest rate was 10%. So it was 10% from June, July, August, September, October, November. So how many months is that? 1, 2, 3, 4, 5, 6. For 6 months, it was 10% over 12. And then for the other 6 months, it was 12.75. So let's calculate this first 6 months. Is equal to this. We get, okay, so I saw that happening differently in my head. Okay, 200, 1, 2, 3 multiplied by 10% multiplied by 6 over 12 is equal to 60,000. So this is the interest rate. This is the interest for June until November. So now the other 6 months, let's calculate. We're still using what? 1,200,000 multiplied by now we're not multiplying by 10%, we're multiplying by 12.75 multiplied by 6 over 12 to get what? So let's do the calculation. 200, 1, 2, 3 multiplied by 12.75 multiplied by 6 over 12. Okay, so this is incorrect. Yes, it's incorrect. 12.5%. Then when you say enter, you get your 76,500. So our total interest on loan, we're going to say this amount plus this amount to get our total interest on loan. Interest on loan will be under our financial cost. So here we're going to have open bracket. We're going to say open bracket, and then we say 76,500 plus 60,000 to get our total interest on loan. Okay, so done with that question paper. So let's see another question paper. So I see we have 44 minutes already on this video. So this video was so long. So let me just try to do something fast. So I'll just end it after 1 hour, or maybe after this question paper. But I'll be doing just, let me see what are we required to do here. Good, very tense. Okay. Salaries 10%, central expense. Okay, so as we can see, this question paper is exactly the same as the one we were doing. Only the only thing that's different here is the amounts. As we can see here, number 10, they're saying interest on loan. So they used 2% this time instead of what? 2, last time it was 2.75. And then also a new vehicle was bought. Last time they said they bought it for how much? For 200,000, I think. So also the dates maybe. The year end also, it's also different. But then if you can see transaction number one, it says 400 were returned. So same thing as that last question paper that we're doing. They also returned, I know I forgot how much it was, but then they also returned something. Custom duties also, same thing. If you can recall, rent has been paid up to 30. So I think 2 months was missing. If you let me check, it's 30 June, isn't it? So let's see financial year ends. The financial year ends 31st December. So from June until 30, so it's 6 months. So 6 months rent is missing, not has been missing, it's missing. So this question paper is more or less the same as the one I was previously doing. Okay, so I'll just close that. Let's see this one. What's happening? Okay. Prepare the statement of profit and loss. Okay, so here we are. Let's see. Same thing. So if you can see, guys, all these question papers, they are repeating. All these question papers are repeating. So meaning if you master one question paper, then you are done. If you master one question, because if you can see trading goods 825 were returned, same as last question paper that we are doing. So expect something similar to this when you are doing your final exams. Expect something similar like this, because as you can see, this question papers is for the past. It was last year's question paper, so this is last year's question paper. So meaning this is how they're setting all their question papers from. This is how they're setting their question papers. Okay, let's see. Now we're doing 6 June 2022. Let's see 6 June 2022. What's a penny? 6 June. That's a penny. Statement of comprehensive income. Okay, so I think this is a bit different. Allowances for credit losses must be adjusted. Allowance for settlement discount. Inventory was returned. Okay. Furniture was bought. Okay. Interest on fixed deposit must be adjusted. Provide for the outstanding interest on loan, interest on rates. The owner cashed. Okay, so I don't know. Should I do this question paper also? Okay, so since time is okay, so I'll do this question paper. So I'll do this question paper. I think it's a bit tricky, Niana. So I'll do this because so now we are adjusting our allowance for credit losses. We need to adjust. So last time we were creating, so now we are adjusting. So you need to know how you deal with this if it's asked in this way. And also we're having allowance for settlement discount granted. So we also need to know how you deal with this. I think what else do you need to understand? So also here they say new vehicle and new furniture were bought. So now both vehicles and equipment are being affected. So okay. So I think I'll just do another video after this one, doing this question paper and another question paper. So let me see also which other question paper am I going to be doing. So I'll be doing this question paper. What is this? So on my next video, guys, which I'll be posting right after this question paper, right after this video, I'll be doing the video for that question paper, for this question paper actually, which is 6 June 2022. So I'll be doing that. So let me just close this because we're done with that. Okay, let's see here. What's happening? What is this? Okay, income statement. See, transaction number 1, straightforward. Adjust provision for bad debts, allowances for, okay, the water and electricity account is still payable. Take note into account that the vehicle will cross carrying value of the S was sold. Okay, interest received includes an amount of 3,000 which is applicable for the next financial period. The loan was made. Okay, provision for legal. Okay, I think I'll just do the insurance. Insurance, I think it's a bit. Okay, so insurance is more or less like, what was it? Ish. Okay, I'll just do this question paper. Some of these transactions here. But I will not be doing this adjusted because I'll be doing it on this question paper. So I'll just do different things. I'll just do what was not included on that previous question paper there. And then what's going on? Income statement. Okay. There we go. Come here, we'll come here. Rent has been received, increased by 3%, implemented. Okay, I'll do this. Rent. And fixed deposit calculate outstanding. So I'll do this question paper also. So next I'll be doing this question paper and this question paper. They are going to be our main focus. This question paper I'll just be doing few transactions, 2-3 transactions from there. Let's see the last question paper. What's happening? 5%. The premium of 900 expires on. Okay. And then the loan obtained yearly, the interest last 3 months must be payable. Rent. Okay, interest. Okay, so I'll also be doing this question paper. So I'll do all these 4 question papers on my next video, but then I'll be moving extremely fast so that I don't find myself spending another 51 minutes on a question paper. So yeah, I'll be doing all these question papers on my next video. So be on the lookout for that. But okay, so I think that's going to be it for today's video. So if ever this video is helpful to you guys, please don't forget to like and also subscribe to the YouTube channel so that you don't miss out on any future content in which I'll be posting. So without wasting any more time, guys, so from me to you guys, this is goodbye for now.